News.
Stats SA data shows inflation rose to 4.6% year-on-year. That's up from 4.4% in May. The main drivers of annual increase was the housing and utilities and transport categories.
Between May and June this year, consumer prices were up by 0.4%. This was mainly due to the faster pace of the increases in the cost of transport. During this period, the fuel prices increased by between 82 and 85 cents per litre on the back of the weaker rand exchange rate and the higher international oil prices.
We've seen now the third of 4 months of hefty increases, and I think the positive news is that we might see a small drop in fuel prices in August, as the current over-recovery on the petrol price is in the order of about 45 cents per litre on a daily basis. So that is quickly busy to work down on the average, so we might see a small drop. So I think the worst of the fuel price increases are behind us, and now the important factor is to see if there's going to be any form of secondary impact, i.e. will retailers put up prices in general to compensate for the higher transport costs.
Even though fuel prices have been increasing, food price inflation has remained steady. This is a basket of some of the basic foodstuffs that most of us buy on a monthly basis. In here are basic food like brown bread, we have maize, we have oil and sugar, and some rice. You may have noticed that some of the prices of these goods may have gone down marginally over the past 6 months or have remained the same. That is because of the bumper harvest that we've seen following the drought that we've seen in the country in the past year or two. The price of bread in the beginning of the year cost you about 12 rand 4 cents and has gone down now to 11 rand 53. Well, the price of maize meal has gone down from 19 rand 47 at the beginning of the year to about 18 rand 9 cents. This may change because the inflationary pressures that we're seeing in the economy at the moment are mainly from the weak rand and the strong oil prices, leading to high fuel prices, which will lead to increased transportation costs of goods from the farms to the factories, and from the factories to the retailers, the cost which may be pushed down to the consumer, increasing food prices. Most of the CPI basket components remained unchanged. Health and education inflation remained flat, while restaurants and hotels saw a slight drop during this period. Inflation is expected to continue an upward trajectory, but should remain within the Reserve Bank's 3 to 6% target bracket over the medium term. Economists say the upward pressure will likely be from the depreciation of the rand, the effects of the VAT rate increase, higher fuel prices, and a possible increase in the food prices. As a result, it is expected that the Reserve Bank will keep the repo rate unchanged.
This economy, does not need any high interest rates at this point in time. With inflation below 6% for 15 consecutive months at a level today of 4.6%, and looking at our forecast not reaching the 6% target level in the next 18 months, I think there's no reason. Also, on top of that, if you look at the very low economic growth environment, for the bank to change interest rates. So we believe that interest rates will remain unchanged at the current levels, probably for a prolonged period.
Kruger believes inflation will average at 4.6% for this year and 5.1% for next year, a bit lower than was earlier expected. SABC News, Johannesburg.